raised 1.5 million in one day. The target was 1 million, and they've already raised 1.5 million. I think this is amazing. I did a video before, but in this video, I'm actually going to look at their investment deck and go through it. This is kind of what I do on this channel. I do some kind of investor analysis, insights, etc. I've been investing in companies since 2007. Let's dig into it. So this is the presentation. It's quite long, so I'm going to try and do it as quick as I can to get to the insights. It's a small company at the moment, 40 sites, but with a lot of room to grow. 55 million in sales, so that's over 1 million per site, which is always good. Tortilla, as a comparison, makes about 1 million per site as well. They're bouncing back from COVID. Let's move on. It's great quality. You know, I've been a customer of Honest since about 2016, something like that. I love their burgers. I think they're incredible. Yeah. Okay, so they've grown. They've got some investment from, looks like a VC that's also invested in Leon, Soho House, the Rafa, the sports brands. It's kind of niche brands, I guess, quality brands, consumer brands, etc. And they're about quality. The food's amazing. If you haven't tried some of Honest Burger, you should definitely try it out. And actually, it's consistent across meat and vegan food. And their vegan burger is incredible as well. They've got those three kind of routes, if you like. There's the chicken, beef, and vegetarian route. £10 lunch offer is really great because they didn't used to do this. I think this is relatively new. Certainly, I haven't seen it, but then I think it's fantastic. We'll get onto the financials a little bit later. We're just going through the deck here. They've got local suppliers. You know, it's an amazing brand. You could see how it could scale actually, because just the just the brand recognition and who they're partnering with and the whole kind of local vibe is actually quite scalable. If you look at Starbucks, they talk about getting good suppliers and whatnot. Let's look at the products here. Triple fried chicken looks good. Christmas, they do a Christmas edition. That's awesome. They do a Caribbean fried chicken in June. A May Texas burger. It's making me so hungry to eat these, seriously. So they've got great products. They're consistent and they're thinking about the environment as well. So they're making a start on that. And they've got on a website of Honest Farming to find out more. I'm not going to look at that for now. Apologies, my computer's being a bit slow. So in 2009, they opened a small restaurant in 2011, second in 2012. They got investment in 2015. They opened first restaurant outside London in 2017. They went from that to number 30 in 2019. And now they've got 40 in 2023. This is what a lot of brands talk about, a model that works outside of London. A lot of these companies are very worried about operating outside of London, and no idea why. If they have good food and good products, it should be able to thrive anywhere in the world, in my opinion. Certainly anywhere in the UK, and that's what they're saying. 31 is around London, and they're growing their footprint around the UK. And why not? Why can't they have hundreds of stores? I definitely think they can. Tortilla have about 100 stores. I know that's not a burger chain. I don't really follow the burger chains too much. However, I did invest in GBK when it was part of Clapham House about 10 years ago. So burger chains do very well. They're award winning. I'm not going to look at that. You know, I've already told you about the products are fantastic. You can see their reviews. Customer satisfaction and frequency, you know, it's 3 times is that per year. I think it is, and they've got a growing database. Again, this is something that Tortilla are big on as well. It is good to have a database. You can see, you know, the investment people have made is probably from their CRM and their database of passionate customers. So backed by a VC or whatever. Future growth, they want to open new restaurants and launch premium quick service brands. I think that's a fantastic idea. I'll talk about my thoughts a little bit later. So they want to expand. I don't know the difference between the colors here. I suppose the green are the ones they want, potentially. Here we go. So the number of restaurants for Shake Shack is 177, it looks like. Five Guys have 156. So yeah, and they've got good returns as well, 50% CAGR. So yeah, there's a gap in the market, 100%. I think they can have a couple of hundred stores in the UK. They've got this new smash patty. It looks great. It's quite quick to cook as well, and it's cheap. which again, that opens up $8.90 for a meal. You know, it's kind of fast casual. It opens up the quick service restaurant. Here you go, quick service restaurant. So it's cheaper than the other burger brands, more expensive than McDonald's, but nevertheless, I think it's great kind of placement in the market, to be honest, because I shop at all these brands, well, Burger King, McDonald's, GBK, I told you I invested in over 10 years ago. But honest, I think this is a great value prop. I think the pricing is great. It's going to fly off the shelves. If you look at their storefronts, they do look a lot like all of the growth pizza brands and tortilla and you know, the Leons of this world as well. It's very much this one at the top looks more like McDonald's, to be honest. I think they're going to do well here. I think it's just going to fly, to be honest. They've got a good team. You know, people from Yum Brands, Burger King, Domino's. I don't remember that chap from Domino's. I invested in Domino's for the best part of 5 to 10 years and enabled me to buy a house, actually, that investment. Anyway, that's enough about me. These are the food costs, labor costs, but I'm not worried about that, to be honest. Average weekly sales, 27,000. Yeah, that is over $1 million. You know, times that by 50, it gets to about 1.4, I guess. EBITDA is fantastic, 4 million. That is brilliant for a small brand. You know, that's good. It's 10%. You know, yeah, that's good for a small brand. It can only go up, you know. And if we look at the like for likes are very, very strong as well. Peach is what a lot of these brands benchmark against themselves. So, you know, if you look at my tortilla videos, you'll see the same thing. You know, they benchmark themselves. So they're way above benchmark. What about this normalized EBITDA? I guess that's the future EBITDA, you know, once you get away from COVID. So I guess to 2024, maybe 5.8, I guess. So the EBITDA for last 12 months trailing 4.1, valuation multiple 11, enterprise value 45, less bank debts 31, pre-money equity valuation. Let's just have a quick flick over to see if that's the case. Pre-money valuation 31, yeah. So that is very, very cheap. You know, very cheap for a brand that's generated 4 million. I can see why people are investing in this. You know, it's earning very, very well. Okay, so they want to get to 122 restaurants in 5 years. So if they did that, let's just, for argument's sake, do this on the back of a can, if you like. They're making about $1 million a store, and it's about 10% profit margin. But here they say by 2019, it's above 10% profit margin. That'd be 12 million, right? And they're saying 18, so maybe it goes to 15% profit margin. It looks to me like the Smashed is a higher profit margin, maybe. Additional EBITDA multiple potential from the QSR. There you go. So, you know, if it gets to 18 million EBITDA in 2019, a 20x valuation of that gets to 360 million, which would be over 10x return in 5 years. Some growth companies, you know, Domino's Pizza at one point was at 40 to 50 p. So you could even have 600 million valuation. I like this. I've got some final thoughts I'll talk about in a moment, but let's just look at their forecasts. So they're always using a 14x EBITDA, which is very, very, you know, which is very cautious. You know, you could easily make that 20 or 30. So you can see here it could be valued at 259 million. Number of stores, I mean, I suppose it doesn't talk about how much it costs to get to the number of stores that they are talking about. So they want to get to 122 stores. You know, I don't know, you know, it'd be good for them to break that down. They haven't talked about that. Anyway, I do think this is doable 100%. This is the equity rewards or whatever. So you get 20% off. I don't know if is that forever or is that for a year. You get 4 meals up to what else you get? You get a new store invite if you invest 5k. And the only differential on the higher amount is you get a free party at an honest restaurant for 25k. Not sure there's much insight and, you know, or purpose behind that, but listen, like, this is a good deal. If you think about it, you know, they're valuing themselves at about 10-11x of what they are at the moment. They're very profitable. It seems to be a simple rollout to me. It's not a genius. It's not, you don't need to be a genius to roll this out. You know, they've already got the products, they've already got the customers, they're getting the investment. And I think the only thing that I would kind of almost question why they're not doing is rolling out the QSRs as a franchise opportunity as well, because they could easily have hundreds of these franchise stores, QSR stores around the UK and maybe around the world. So that's my only thing. I suppose linked in with that is how much does it cost to create one of these stores, the QSRs, the normal stores. That would help to understand, you know, how many times they're going to need to go back to the market for crowdfunding or VC funding. As I mentioned, I think the franchise opportunity is great. The quick service restaurant opportunity on Deliveroo and Uber Eats is also quite a big one. If dark kitchens, they haven't talked about that. So I think they're the opportunities. I really like this. I'm a little bit gutted that that I'm no longer, you know, working full time. You know, for people that know me, they know that I used to work at WhatsApp, but there was massive layoffs. If I were working in full time employment right now, or had you know, significant cash flow, I would invest in this. I think I am going to invest in this, but I'd put in a, you know, a substantial figure, because I believe in this brand. I like this brand. It's not advice. This is just what I would do using financial logic. You know, if they're $1 million a store and they're 10% profit margin at the moment, net profit margin, at least on the EBITDA element, not on EPS, depending on how much they expand their share count. Hopefully they won't do that. And they're saying in 5 years they're going to increase the margin to 15% and roll out stores to 122 in 5 years. That is a growth opportunity. If you imagine they get to 120 stores in 5 years, what's stopping them getting to 1,000 in 10 years? You know, what's stopping them opening up franchising? What's stopping them going to other countries? Nothing. This is a universal brand. It will work around the world. You know, if they do halal in the Middle East, I'm sure it will work there as well. I love it. I really, really love it. I'm going to try to find a way to invest something significant, at least for me. I'm in a difficult position, got a new kid, not working, laid off from Meta, etc. But consider, let me know what your thoughts are. Let me know what your opinions are on this, pros and cons. Are you investing in this? Has this video helped you to make a decision? I do talk about listed equities as well as private, and, you know, angel investment, a little bit about property as well. Make sure to check out my other videos. If you have enjoyed this video or you found it useful, consider liking and subscribing. Check out my other videos that are going to pop up. Remember that knowledge is power, especially the right kind of knowledge, and progress is everything. I'll see you guys in the next video. If you haven't understood any of these concepts, like PE ratios or EPS or investing in angel investing, tons of videos on the channel explaining all of these concepts. See you guys in the next upcoming video. Take care. Cheers. Bye.